everybody to the show, and hopefully everybody came out all right and their families and everything. There was massive flooding in the area here. A lot of it happened east of me and in western North Carolina, and pretty devastating pictures. Few people worried about me. The flooding here in Knoxville would have to be pretty darn bad to really get a lot of stuff. I mean, it's we're kind of down in the river valley, but my house is like 300 feet above the river, and my parents are a little closer, but it's gonna flood a massive area even if we get a few feet above the river. TVA owns the rights to put like 13 feet of water, I think, or 7 feet of water. I don't know. It's a massive amount of water, and they're actually spilling out of Douglas, which is where we heard about all these dams supposedly failing in the mountains and stuff like that. Asheville, North Carolina, actually drains into Douglas Lake down the French Broad River, and they're spilling 450,000 gallons a second of water. That's usually they're talking cubic feet a second, but they put it in gallon terms. 450,000, half a million gallons every second is coming out of that dam, coming downstream toward Knoxville. They have some flood warnings for people between that dam and where the rivers come together just above Knoxville. French Broad and the Holston rivers come together and make the Tennessee River just in Knoxville here. And just a wild thing. Anyway, it's just the devastation, just amazing. Asheville just kind of wiped out a lot, and there's little towns like in Chuckey, Tennessee, just almost just wiped clean. It's just crazy. Like, look at the pictures. So I'm fine. As far as I know, all my family, that we all lived further to the west than where the problems were, but pretty crazy. The eye of the storm kind of went right through here. So it was the dirty side, was they call the dirty side of the storm, the right side, where all the water was coming up, and as the low pressure and the system was trying to go across the mountains, it was just squeezing the water out of those clouds. And that's why the kind of the east side of the mountains took the brunt of the water. Up to, I've been seeing numbers estimating up to 45 inches of rain on some of the mountains there. And that's why it was just epic flooding. Think about that, 45 inches of rain. Just crazy numbers. So anyway, if you want to chat with me, if you want to say, hey, good morning, like Nikki and Kimberly, my favorite subscriber, and all the things there. I don't know what I'm hitting all sorts of buttons here and not getting the right one that I'm trying to do. There we go. Click the button right over here where the monster can is. Be a subscriber on the channel. A few seconds later, you can chat on the stream. And yeah. And if you hang out here, make sure you subscribe and hit the notifications. And if you like what I'm doing, you want to support me further, you can be a channel member. And if you want the roadmap line that I'll show on a bunch of charts, link is down below. I do have a bonus trade. I was kind of showing that off there as a teaser. I have a bonus trade set up today. We'll see. It's got pretty good numbers. So welcome to the stream, everybody. I know you're here to hear about market stuff, not about hurricane stuff, but yeah, my parents were at the beach last week during the hurricane, and they made it back. They had to go through Atlanta to get here because the interstate just doesn't exist anymore, but across the mountains there in North Carolina into Tennessee. And even the backup way that you would go north, it's gone too. So it's gonna be some major problems coming in for the next, gosh, I don't know how long it'll take them to rebuild. You don't just build interstate back. It's probably gonna take years to put all that stuff back. So it's gonna be wild engineering problems. So anyway, glad to have everybody. Glad you're safe. If there's anything I can do to help anybody, let me know. And here we go. S&P 500. Dun, 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 dun. Welcome to the last day of the quarter. Last day of Q3 today. And we're basically at the targets here. We were hitting them right there on Thursday and Friday. Put that right down there. right at the target. What do we expect next? Let me know in the chat. Dun, dun, dun. No, Discord member and a channel member are not the same. Yeah, YouTube channel is different and separate from Discord. Dun, 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 dun. I share extra content on YouTube that I don't share anywhere else. And it's a lot of behind the scenes type stuff. So anyway, moving on. Alrighty. I guess we should do the disclaimer. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation tend to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. There you go. All right. So, looking over here, checking out the calendar. Hey, Sledge, good to see you. Sunday, nothing really. Monday here we are. Today, nothing again. Pretty much nothing. We do have Fed Chair Powell speaking at 1:55 p.m. Maybe what he says moves the market. I mean, he tends to be a guy that sometimes when he says something, the market goes, oh no. And those algos listen to him. But I don't really think that he's got much to say between now and the election. The election coming up in, 33 days, 34, 35 days, 36 days. I don't know. Coming up soon. I don't think it'll matter one darn bit who wins. And interestingly enough, guess what? Some of you aren't going to like this statistic. 87.5% of the time, 87.5% of the time, when the market is up in the 3 months prior to the election, the incumbent team, if you will, remains in the White House. Think about that a second. In the 3 months prior to the election, if the market is up 87.5% of the time, the incumbent remains in control of the White House. Yeah, dope. So, yeah, I knew some of you wouldn't like that, but that's something to keep in mind. Something to keep in mind. And so on Tuesday we have ISM manufacturing coming up right here. Not really. I mean, it's colored red for Forex Factory, but I'm not sure we're gonna care much about it. Jolt's jobs openings. Down here, Wednesday, we get some ADP non-farm employment change. Crude oil inventories, unemployment, ISM services, final services PMI coming out on Thursday. Then Friday, we get the big non-farm employment jobs report thing, unemployment rate. Yeah, I saw another thing over last night. I was digging through, looking at some stuff. It was saying how our young people having a hard time finding jobs, having a hard time getting jobs, finding purpose in life. It was saying that the 16 to 29-year-olds, males, were 8.6% unemployed. And that same age group, 16 to 29, females were 7.6% unemployed. I was like, wait a minute. Wait a minute. Okay. A key demographic for doing jobs, and they have almost double the unemployment rate of the official unemployment rate. That means that the higher age groups would have to be 1% unemployment to balance that out. I think something fishy is going on with the unemployment rate. If those kind of numbers were going on, I was like, something doesn't jive. Either what I was reading, the article I was reading, was not correct, or they're baking these numbers, which I vote they're baking these numbers right here. I think this is much higher than whatever they're saying. You can let me know in the chat what you think, but yeah, I'm suspect on this right here. Not sure. I know a lot of people that don't do much. There's just a lot of free money out there still. So A lot of free money out there. All right. Back to it. What are we talking about here? Here we are, right here. 2 days that the resistance have not poked through. Now, the crux of the matter here, the thing to look at is this one. This one has a higher probability of reaching the target based on history, but look at that gap we've left. Here's the target. We're at that target on S&P. We're just above resistance here on NASDAQ. Resistance coming across, and we're just hanging out right there above it. Interesting indeed, I think. This is indicative to me that we may actually see a rally to get us up into those targets. And I need to turn on something that produces the numbers. There. See, like on the NASDAQ index itself, 76.92% of the time, when we kick off the entry, which we did right there, we did right here, 76.92% of the time. This has occurred 39 times, so it is statistically significant. We go on up and hit the target. The target is the purple for this thing right here. So we've left that gap there. Left it there. East Tennessee coming out of me. From where we are now to the target, we're talking about a 5.8% rally on NASDAQ. That's pretty darn good. Something like TQQQ. Right here, a leveraged instrument. Maybe like, I always warn about leverage, but I want to drive home a point here. Look at this, 94% of the time on this one. Look at the profit factor. Absolutely insane. This is highly likely to finish up and go up here before we have any kind of major correction. Now, major correction for this would mean a lower low below this low back here. Back here. That's going to be a pretty deep pullback. Now, the leverage does cut both ways, but we go look at QQQ. %84 of the time. Not quite as good as TQQQ. TQQQ hasn't been around as long. We have some older, this has more trades in it right over there, and 84% of the time. So looking for that move up right there on QQQ. Ultimate failure would be dollar below this low, so down at 423-ish. This would fail. It's going to stay open until we either get to the target or the stop out. Like this statistic is going to work. And there's no early exit. There's no book profit now. There's none of that stuff. So it's either going to go to the target or stop out. And well, it's having a dandy hard time getting there. So look at the average is 41 bars to get there. We have been at this for, there would be 41 bars right there, the average. So we've still got a few days left to the average. We're sitting at 30 bars. It's been 45 days. 41 bars takes us out 60 days from the entry point. The entry point back here, August 16th. You may be sitting there going, wait. This has been a common thing. Like, wait, you're talking about bars and days, and these numbers are different. Yeah, we don't make bars on the weekend. So the calendar days is 60, trading days is 41. So if you're not used to working in longer periods of time, once you get past 5 trading days, you're going to absorb some weekends in there. So the calendar days start being different once you get past 5 calendar days on a trade. So there you go. All right. Now, just because the average is 41 bars doesn't mean it can't be 2 times the average, 3 times the average, 4 times the average, 5 times the average. It could last. We could go sideways indefinitely here. Now, I don't really feel like that's the market environment we're in. I think we're going to probably rally up and hit the targets sooner than later. I'm kind of bullish on the market until we get to these targets. the high probability historical pattern suggests that we're going to go higher and hit that target. We have set this up. It's in the, this is an index. It's the NASDAQ 100. You know, this is the ETF for it. NDX right here is the actual cash index, and it indicates we're going on up here. Now we got some stuff to work through, and the S&P definitely hitting resistance here. And you see my algorithm sold out at the target there, right on the money. That one finished. Now, some other interesting ones like SPXL didn't quite make it. The leverage didn't quite get there. Coming up a little shy so far. It's just interesting to kind of go through the market and look at that. Now we're getting, looking at what I call the market oscillators. These are how many of the S&P 500 stocks are above their 20-day. Yeah, we're just kind of consolidating right here. We haven't pushed out above 80 really. S5 FI is above 80, kind of making a big tail. This may go on to rally. If we get into the 90s on this, it's going to indicate, this one in particular, if we get into the 90s on the S5 FI, stocks above their 50-day moving average, this indicates that we're probably getting really close to a market reversal. All right, look at all the times in the past. Let's draw another horizontal line on here and put it up here at 90. I'm going to have to tighten that up just a hair. Edit that, coordinates. Let's put it at 90. Put the style. Let's make it purple, since that's like the target, right? Let's make it purple. There we go. So if we get to 90, look at, we very rarely, very, very rarely stay above 90 without a significant retrace. It's just a matter of days usually before we get a large drop off, like 1, 2, 3, 4, 5, 6, and then down the tube. A few days up and then down the tube. Hung out here about 2 weeks and then down, flushed it down. And the Apollo makes no, very rarely, very, very rarely do we stay up above 90 on S5 FI. Now, you may be like, well, my platform doesn't show this is a stock. It's not a stock. It's an index. You have to look at the platforms that have it. TradingView has it. Barchart.com has it with a live view. This one only updates end of day right here. So it's one to keep an eye on. If we get above 90, it's just a matter of days. Like, that's time to add protection. Definitely add some protection to your account if we get above 90. 80 tends to be like the cautionary zone, but it can take us a month. We can hang out a month above the 80. We don't usually hang out but a few days above 90. So we can arc over here for a month or so. That would put us right out toward the election and then drop. That's what we're looking at right now, is potentially getting kind of excited into the election. Maybe the incumbent wins and then knee-jerk reaction and the market drops. It's kind of what it's looking like might happen. I threw that scenario out there all the way back starting in February, that we might get a rally into the election. And that's what we're looking at. We've got kind of sitting here in place. S5TH, this is stocks above their 200-day moving average. Poking up here, made a new high. It's been back since April, since we were up in this area. Got that large pullback in April. I think we could push it a little higher. And this one, we can remain up here for an extended duration before we get a large market pullback. See, we did that back here. We stayed up here from November until almost a year. We stayed up here. Right there. This moves a lot slower. Almost a year. But we're eventually going back to the bottom. It's giant market oscillators. The market has to flow money in and out of everything, and these are just kind of showing us. To me, they show us where that kind of opportunity is for the market to go. Since we're hanging out at the top, opportunity is going to be to the downside. So, dun, 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 dun. Yes, overnight started out pretty spicy and then kind of corrected. It's kind of, I thought we were going to go up, and then when I got here this morning, I was like, no, why are we down here? What the heck? What the heck? So, anyway, we opened right here yesterday. It was looking pretty good for going higher, and then I come in the office this morning, and it just was a corrective choppiness into the low here this morning. We're under the roadmap line on the S&P 500 futures. Why the futures? Because we get this extra action here overnight where the S&P doesn't present that information at all. So the S&P is holding above the roadmap line on the 15-minute, and we could extend it on higher. Be pretty nice. NASDAQ here, same situation. Had that big drop on Thursday. Tried to go higher on Friday. Wasn't working out. And if we look at the three-wave retrace situation here, that low, this high, we may drop down just a little lower back to this orange support box. Same on the ES here. Three-wave type correction. Corrections happen in three-wave type situations. We may see a little softness, a little more softness in the market down to this 5770 area right here before we can find support and turn it around. Now we could get an extension on down to 5755. That's entirely possible right down here too. And dun, 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 dun. Oh yeah, and not UFC. I do see that. Like there's East Coast labor contract hasn't been renewed. There's no negotiation on schedule, and starting tomorrow, October 1st, there's no labor contract for offloading any cargo ships, not loading or offloading. So the ports will be shut down basically on the East Coast, and can be quite crippling and cause all sorts of ripples all throughout the economy. Russell here is, let's just pop up the stories on the daily here. It's not even on the small time frames. Right there, lower high. Underestimate all the things I watch, Kevin. We've got this low here, we've got that high, we've got this low, and we're kind of stalling out where we did an echo of the move up off of this. That low to that high, echoed right off of this low, and we stopped right in the vicinity of an echo right there. Turning down, retracing, this can go on down. Now, if we can break through the prior highs, target potentially up here. Ideal target right at 2368, but I'm not feeling it yet. This one has not been nearly as bullish as the other two indexes, the NASDAQ and the S&P. We are not at all-time highs. And why is this one important? It's because this is where like 85% of the country works. Right here. Now, like 85% of the market cap, maybe even 95% of the market cap exists here. Right? But they don't employ, like that's the market cap. That's where the value of the market hangs out here. But where we all work is right here. 85% of the country works in these companies. And we're, why does it seem like the country doesn't feel so great? Because these companies aren't doing so great. They're not at all-time highs. They're not pushing new highs. That's why I watch this one. And this one looks like it's set up to flush again, which is not going to be great. CL, probably going down again. We'll see on the crude oil inventory this week. We may flush it on down, make another low, make a lower low before we can turn it around. Right there. GC, working on type of retrace. If you were in the gold rush trade for the weekend, game over. It's time to close it out. And there we go. Not awesome. Bitcoin was trying to break out. We got on the futures here, we got to the downtrend of highs that I've got drawn on here. Where it's not the best downtrend of highs, but it's kind of pretty good. And we came up, tested it, and getting a knee-jerk reaction off of it. I wanted to see us break through. I was cautioning on my weekend update for crypto that we may see a pullback off of this zone because we're not getting through. Here's the spot market. Didn't even quite touch it on the spot market. Got to be careful. Ethereum, I kind of drew this on here. What, last week? 2 weeks ago? I don't know. And drew it on here that we may pop up, retrace. But look, we actually popped up, retraced to that level, and popped up again. And now we're retracing again. We're working through this zone, potentially going to break out. Potentially. I don't know. We're going to have to, we have a significant resistance on Ethereum here that we're going to have to get through. I'm just kind of keeping both of those in my eye. Dollar continuing to work, soften up the downside, Next support we may bounce off of right down here around 99.70. If we get through that, we're probably coming down here to the mid 90s. We may find support there and do another one of these big rallies off of that. But ultimately, we may be headed back down to the low 90s, to the low we had back here in February of 21. NKD. Keeping an eye on this baby. Friday, this was red, right back down to the roadmap line. If we can push it out, if we can break out, this is probably indicative that we're cruising on up to the target up here, 44,000. The U.S. market will probably follow along if we do this on Japanese futures. Now, if Japanese, futures and stock market, this is the Nike, whatever. If this starts breaking down, we break lows and we start heading down where we're going to make lower lows, potentially down here in the 24,000 area, the U.S. market is going down with this. All right. It's a global market situation. You can argue all you want that doesn't matter. It's been pretty accurate lately. The yen carry trade is important to financing the treasury, and it's important for global liquidity. Now, China over there, amping up global liquidity, but be careful. PG&E, right here. Oof. Yeah. I think the port situation, the big thing is you won't be able to get any bananas on the East Coast. Anyway. So we have this move right here. That is a pharmaceutical. I don't usually go after these pharmaceuticals. So this, when you zoom out a little bit, looks like a giant sideways choppy hot mess. Kind of the bubble pattern a little bit with a big pullback. Maybe a bubble again with a big pullback. Maybe a bubble again. Usually on these bubbles, we don't tend to make higher highs. We tend to make lower highs. Be careful. This may not break above this zone. Even though it's on the biggest gainer list. Be careful. Now, how do I make this list? I go pull, in the pre-market, I pull everything moving $2 or more up or down. This one 14, and make the list. So it is a static list. It does not get updated as we come into the open here. This one cruising, we may go up and retest this level where we had some sellers. FUTU holdings, that just launching off. So I expect some resistance between the 1618 and that area right there. And that's a cool color. Don't remember what I was using that purpley color for, but there you go. PDD, this one, fired off. Like here we are. It's fired off a potential entry on Friday or Thursday. Friday. Now, it does not have a long history, and I'm not recommending you get involved, but 175 is the target if this thing can keep the mustard going higher. BABA, look at that one. Strong reversal. China keeps pumping money. Target's up here. It's been up there for a long time. 180. May come up to 180, get a retrace back down, test the roadmap line before we can go even higher. Had that up there for a long time since we built this bottom over here. This target's been up there. So we kind of built this bottom back here in November of 22, rallied strongly, and then didn't participate while the U.S. markets were going up. This has a large catch-up opportunity. May see a lot of money rotating out of AI and into China. EDU, potentially reversing here. Golly. Gonna have to get through the 618 area where we rejected so many times. If we can get through there, the upside target 103. CWB, China, internet bull stuff. Well, I'd be cautious. We're at the targets already. Could go up to 57. Could go even higher, but this is leverage stuff and it's China stuff. That's two things that I kind of stay away from. Baidu, man, I was bullish on this for a long time, and then it bummed me out. I'm not sure it's going to work out, but I do have a target up here at like 280 for Baidu. Pretty smoking. A lot bigger than Baba's potential target. It has it in the chart, but I'm not sure it's going to do it. I'm not sure. Not sure. NTES. Right here. We're in a downtrend of lower highs. If we don't break that, watch out for a lower low. Although we did hit the measured bounce target zone there, which puts the potential for this to rally up here to 150, 160 area right there. If we can break out the downtrend of lows, or excuse me, the downtrend of highs, lower highs. That's what I was trying to say. The downtrend of lower highs. If we can break through the downtrend of lower highs, 150 upside target. It's pretty spicy. I mean, that's potential there. Upwards of 50% gains just on shares. Pretty strong. ETHD, ultra short Ethereum. This looks like it's going to go down to me. I mean, that was a lower high. That high, that low. This is leveraged. May not work out. It did do an echo there, but it could, commonly we see the second move go on an extension down to 45, possibly 35. Would not surprise me before we saw another bounce on ETHD. ZK, yeah, not enough candles to do anything with that. Autodesk, potentially going to break out here. If we can get above that long-term, this is a long-term trade right here. Long-term. We've been working on this breakout for a long time. See, we rejected over here, retraced, held a higher low. If we can break through that 282, 283, 285 area, 376 is the upside potential there. And it may take a while. It may take a long while. And we don't even have a monthly roadmap line. Oh, there it goes. There it goes. Took a minute to calculate. Trading view must be running slow. So this is really a weekly bounce, but as far as statistics go, I don't even know that it has any. Yeah, fired off the entry on a smaller scale. Target will be right up there, just a new high, higher than the resistance. And then this is a bigger time frame trade. Interesting potential, right? On Autodesk. Put an alert there. All right. JD. More China stuff. Came up into the target zones. I would expect. So based on all the things I'm seeing here with Baidu and Baba and the leverage stuff and JD, I would expect this to retrace. Now, they can keep being crazy and making extension targets, but I do expect this to kind of find an exhaustion here and do a little bit of retrace. Leveraged Baba, getting to extension targets. Be careful. Be careful. We're almost to the point where we would confirm the bigger. Ooh, look at that. That bigger breakout, potentially. Take us up to 44, 30. I mean, we're not talking giant numbers here, but that's All 48% on shares. That's not too bad. CQQQ, no idea. China Technology is not one I think I've ever followed before. Up to targets. The yin, up to targets. The yang is probably at the blasting down the lows. Yep. Looks like this may bounce, but it can just keep flushing. Down to $3. This will probably reverse split and become a dumpster fire. TCOM. The yang. You know what's funny here is, even though this is bearish on China, look, this was still dropping while China was being bearish. So that's a mind bender for you, right? You couldn't have used this to short China because it was just blasting into the lows, even as China found a bottom. Look at that. Isn't that weird? You'd think it'd be opposite of this chart, but it's not. So weird. TCOM, right up to the target. Be careful. Could go on up to maybe 75. I wouldn't bet on it. Trip.com. BEKE. This has been on here quite a bit lately. Potentially breaking out. Finally got out of the box. Pushing higher. Do have resistance up here, though. Right there. I'm not sure it can... I don't know. That looked like it was dead. Now it's coming back to life a little bit. Getting above here could possibly resurrect it. Be very cautious trying to chase after this right here. Significant resistance up the 618 level. 618 retrace up here around the 50s. It's like a double from where we are. PGJ, Golden Dragon China ETF. Still lower highs. Cautious here. Extreme caution is advised for a lot of this stuff. China, if you haven't invested in China stuff before, they have different accounting rules they play by. They don't get audits and stuff like US companies do. Even though they play in the US markets, the rules for them are different. And I've been burned lots of times. That's why it's on my list of things that don't always follow the patterns and things that I don't trade necessarily. So be careful. Their sense of honesty is different too. So even though they're required to disclose things, they don't see it as lying in the same way that we do when they make up numbers and stuff like that. It's just a culturally different group of people. And I've had conversations with some very smart people from that area, and they kind of try to explain it to me a little bit that it's just they don't view it as dishonesty, they view it as exceptionalism, and that makes these ETFs and these stocks that are China based very difficult to predict, because when the US or the Western idea of truth comes out, there's a lot of knee-jerk reaction a lot of times. So that's what creates doesn't always follow the patterns. Now this could be a measured bounce right here on this ETF, and that would take us up here, this retrace, potentially up to this 36 to 41 area, right up in here on PGJ. Apple has the setup to go higher, potentially pushing through the downtrend of highs. We kind of rejected it a couple days ago, pushing up into it today. If we can get higher high, we'll get those two stopped right at the exact same level here. Pretty much the exact same level. So if we can get above those two highs right there, we're looking at cruising on up to the target up here at 243. This has been a potential entry since all the way back here. I actually got in back here, I think. Got out here. Didn't get back in here. I've just been waiting to see what happens here. Haven't been convinced that we're going higher yet, but if we can get above that It's indicative of what we're going to go cruising right on up to 243. Not the giantest upside, $10, but Billy, look at that. That's into the resistance zone. We've topped out there quite a bit in the last couple of years. MNSO. What a nasty chart. Looks like a giant head and shoulders, doesn't it? That rejected. Shoulder, head, shoulder. You know, we tried to break down and rejected. That usually indicates possibly the upside. Gotta draw the neckline in here. Yeah, the potential upside, new high at 33 there. Potentially where that one's going. Now I can fake out and go lower, but you know. All right, GXO logistics. Even though it was on the poppers list, now it's on the not hardly moving list. And I mean, could it be a bottom? Possibly. It's not really a trade yet. 59 would be the upside target if we can get the close above the 53 area, 53.50 area. CVS. Are we done? Let's just. I don't want to clear that. It's kind of historical stuff here. When I made the market roadmap, when I actually did the original masterclass for this, CVS was on a tear. And now we're back down here, trying to break through the roadmap line. Can it get through? I don't know. It's going to have to get through, fill the gap. It's got lots of stuff to work through here. Got this gap down. Could probably have resistance at the gap. Another gap up there. Oh, man. This thing's got a lot of stuff working against it. I don't know. WBA looks pretty bad too. And somebody was like, it has to be a bottom now. It can go down. It can go out of business. I mean, this is like a case study in how to kill your stock right here. Look at that. That's the bubble pattern. You see where we were when we started. $5. Not trying to pick on anybody. I just always zoom out your chart and look at it. That was the bubble pattern. The bubble pattern can complete by coming all the way back down. And we may hang out here for a long time. That's pretty rough. That's pretty rough on WBA. Yeah, if you didn't know, Walgreens and CVS are like the two major pharmacies here in the United States. LI Auto just chopping in this box. We kind of found support where I thought we would, and we're turning higher. We may rally back up to the 48 area. I don't really expect it to break out because, well, for years and years, we've not been able to, so be careful. Elf Beauty, I think we have a little more downside to go. A little more to go. Ooh. Oh, stopped out on that one. SVXY. Get a little bit of panic in the market. Yum China. Nice potential reversal. If we can break through this 618 area, we're going to go cruising up to 75 probably. Stuff was declining today in the pre-market. Lilly coming back down for the roadmap test. Higher low. If we can hold that, turn higher, the target is still up here, 1,000 to 1,033. MSTR working on breaking out of the downtrend of lows, and it's not. I mean, it's only got 2 or 3, however you want to look at it. 1, 2, 3, and this one right here. If we can keep that and get through, the target is still up there at the 213 area. And 195 for the current bounce, and 213 for the longer term bounce where we made the high back in March and the low over here. So coin rejecting off the roadmap line. I drew that on there like a week ago that we may do that retrace back down this 165 area before we can push on through. The confirmation of an entry is going to be above that 238 area, right up in here. 235, 238. FNGU, that's a lower high. Caution. This is FANG, leverage FANG stuff. And this may go down. Caution. This is at odds with the QQQ and everything. This has a setup for bearishness, but it is leverage stuff, and leverage stuff doesn't always work out. So be careful on leverage. Right there. Dun, 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 dun. Potentially flushing. I've known about the strike for about 3 weeks, Kevin. It's not, I've just kind of been not really, it's one of those wait and see things. Like we had potentials for big strikes on the West Coast 2 years ago, year and a half ago. Never really, things didn't really develop into any problems for the market. So it's one of those things that could happen, but just kind of keeping a developing eye on it. So NVDU, lower high, lower high, lower high. Support right in this zone where the roadmap line is. Can go lower. ARM, turning down the resistance. Be careful. That can go fill that gap. I've talked about it for a long time. We didn't fill the gap here, and I said eventually we're probably going to come back and fill it. Still sitting on that thought process. TSM did not make a higher high yet. Probably going to do like Lily, come back, retest the higher low roadmap line before we can push on out to 201. SMH did make a higher high, but stopped at that resistance. This is giving me caution all the way across the AI plays right here. These are not the most bullish setups. I've seen MTSU, no, Middle Tennessee State. Yeah, Sledge. You probably get that. Anyway, MSTU. This looks like T-Rex 2X on MSTR. Hey, if you're like, whew, MSTR is too rich for my blood, but you want exposure to get into that target, right there. Right there. MSTU. Grab some leverage on MSTR. MSTR acts like, MicroStrategy acts like leveraged Bitcoin. So here's leveraged Bitcoin on your leveraged Bitcoin right there. SOXX. And same situation as SMH and those other semiconductor ETFs. Finding major resistance. It's not clear. I don't usually play the downside, so these look like they're finding some resistance and may go lower. BULZ. There's a FANG Innovator 3X leverage turning down at that 618 level. I'm really, really, really cautious on this stuff right here. I try to keep an eye on all the things, all right? Like all the things that may go wonky in the market. All these semiconductor ETFs, this technology ETF, they're all indicating bearishness while we're seeing the market show signs of bullishness. So like it's very conflicting for me. AMAT turning down to the prior highs. We do have major resistance up here. Poke through the roadmap line where that arrow was highlighting. We did poke through, but we found resistance at the prior high. Target is still down here if we're going lower. Target up here, 267 if we're going higher. It's a coin flip. As long as we're below this orange box, I kind of give favor to going lower here. TXN. If that finishes the head and shoulders, it could break out, go cruising way up here. If it rejects, roadmap line, support right there. MVDA, that's lower highs. Be careful. How long can we do this before we get the bigger flush? This is the bubble pattern. It is like it. There's no like, well, not this time, JT. This is the bubble pattern, and it doesn't matter if we make another higher high. Eventually, we're going to do the retrace on this. That went up exponentially for no great reason. It's going to flush. sooner or later. FSLR, potential for that to break on out. You know, just this, for example. I said this was going down, and we touched the top of the target. Look at that. Touch the top right there. Before we even made the high here, when we were doing this one, I was like, this one's going down. And then we made the higher high. I was like, if it gets to 1,200, buying an $800 put out as many years out in the future as you possibly can, pay out pretty big. There we are. We were in the 300s on Friday, possibly going to take it on back down to the 200s, maybe even down to the 100s. This is not done flushing out yet. The split probably not going to be bullish for SMCI. And MTSU, Middle Tennessee State. Now, there is an ETSU, but there's an MTSU. When I see MSTU, I think MTSU because I've heard that all my life. Anyway. And there is an ETSU also, but that's a stretch, changing the M to an E. All right. FSLR, resistance, if we get through it. Upside, 322. If we don't, let's draw the downside target. Drop that retrace potential down to 155 down here. And there's the level that would indicate we're going down. We can retrace that and still go higher. I give slight biases to this, more sideways. There's the resistance, there's support, and there's the target on the upside, and there's the target on the downside. No high probability anything for me yet. USD, another semiconductor ETF with a lower high. Tried to break out, rejected. If we can break out, get through the gap down, going higher. If not, going lower. NVDL, leveraged NVIDIA, lower highs. Caution is advised. NVO, whew. Who wanted to bet against me on the target down here? I bet we're going down here. I bet we're going down there. CVNA. I might be a buyer if we can find support and start turning. I mean, look. Those targets, like this one, right here. You know, for a month, we hung out here before we reversed. That doesn't mean we'll reverse quickly. We can chop there at the target for a while. But that one worked out. So NVO, if we can get down there, where did it go? If we can get down there, maybe an opportunity to buy for the next big run higher. CVNA, now it may also break down below support, and you got to be careful. So CVNA finding significant resistance here and may do another one of these retraces. Could be this big, could be bigger. One like that. Put us back down right around 139. If it was bigger, down to the roadmap line, be down around 120-ish, 120, 130-ish. JPM. Probably coming back down to the roadmap line. Hadn't touched over here, made the higher high. Probably going for it again. Do have a bigger target up here around 240. MSTX. There's another less, the MSTU was 2x. This one's 1.75x. Been around a little bit longer. It does have a pullback, even though there's no roadmap line or anything. We went out to the target. Could extend on up 39.42. If you believe that MSTR is going up to those bigger targets, those leveraged ways to play could be beneficial. AVGO target is up here at 130, 139, 193. Dyslexia is my friend. 193 up there. Say the numbers in the right order. AMD rejecting off the downtrend of low or high downtrend of lower highs. I have trouble with that today for some reason. does have resistance all the way up here at this 185 level. Even if we push up, we may find resistance at that prior high right there and reject and come down and go lower. I've been expecting this to bottom somewhere in the 85 to 105 area for a while. Just going to keep waiting. Wait for my opportunity. I may be a buyer down here, but I've got to see it dip down in here and hold support. If we just break out, if we get above this high from back here, and that could be indicative we're going on up to 240, 250 area. But it hadn't really shown any enthusiasm for trying to go higher since March. So be careful. I did take a trade in here. Got out right there at 185 and then just been sitting waiting again. Connell, leverage coin, not really doing the bullish thing. Rejecting the roadmap line, may go on that retrace. So Connell is kind of suffering while we wait for that to occur. GM. I saw a long-term sales global market share chart for GM, and their global market share for the last 20 years just keeps declining and declining and declining and declining. There's resistance right there. Can't get above it. May go lower. Maybe like, well, how low can she go? Put that up there. Put this one over here. Put this one up here. Could go down to 11. Yeah. Ouch. STLA. Well, Wrongamer and I predicted that was going to happen. Didn't trade it. Might go lower. Probably going to go down to the single digits, would be my guess. PKX. That was a little deep for a measured bounce. A lot of deep for measured bounce, but yeah, we didn't do the bounce there, so maybe set up to break out if we can get above this resistance. This was support, now it's turned resistance. If we can get above that right there in that 90 area, we could be heading up to 150, 180 area right up here on PKX. ARC B is just Bitcoin. Lower highs, not all the stuff I said. Now, bonus trade. Now, this one you've got to make your decision. Like, do I like this trade? Do I not like this trade? It did retrace today. I'll show off the statistics here in 1 second. My bot found this setup right here. We did get the daily close above the 618. It is right in the roadmap line. On the bigger picture, maybe this looks kind of bearish, but that doesn't mean it won't rally up here and get to the target at 265. This is semiconductors. Semiconductors are having a hard time today. Get a little retrace. This could be indicative of something you could get involved in. Now, the statistics for this baby right here. The upside target, 265.48. Right there. Stop below 219.10. Profit target, based on Friday's close, was 20.55 on the upside, which today with the pullback, even bigger. See, here was the high that it found. Here was the low it found. We did get that close right there on Friday. Target right up here, right there at the 265.48. 85.7% of the time this has worked out. It's only got 14 trades though since 2010. That's the only not awesome part. The statistical significance of this is kind of a little less than banger, but 28 days on average, that's trading days, not calendar days. A profit factor, pretty smoking, 3.29. right there. So back over the chart, zooming back up, you're like, well, it kind of looks like a downtrend. Don't take it. All right, you don't have to do these trades. So I didn't draw this perfectly in here. Got a little bit off. There we go. We got the close above that 618. We are retracing today, and that target up there at the 265. Whatever I said, 265.15 or 648, 265.48. My fib lines aren't snapped to the highs and lows. 265.48. So that upside potential today, yeah, we're getting a nice little rally here. Upwards of 26. That's 10, almost 11% on your money. Now, 28 days on average. It can go 2 times the average, 3 times the average. We've kind of already been through that today, but 28 bars is 38 days out here in the future. So potentially out to here, could be twice as long, could be 56 trading days. 56 trading days takes us out to right there. That's 80 days in the future. Be out to December. Not too shabby. Buying shares, real, make 11% on your shares. Wouldn't be too bad, right? Not too shabby. That's a nice little potential. These type setups, these daily setups on average take 3 to 5 months. Just throwing them out there, even though they have, I have these statistics like this with the average 28 days. 3 to 5 months is how long they actually tend to last. So keep that in mind if you buy anything to take advantage of that. Shares, options, whatever might be out there that you want to use to take advantage of that. Now, could it go even higher? Sure, but the major resistance on this bigger pullback is right there. And that, our target on the current one, 265, doesn't require, 265.40 doesn't require getting through that resistance up there at 270. To me, that's a strong, what do we call it? A pro, strong pro for the trade right there. You can get to your target without having to go through a major resistance. All right, bias for the day. I know some people still hanging out, still with me. Remember to give me a thumbs up, a like, and share if you liked anything I said today. So we've got S&P wise, we've got resistance here, and we could do a retrace. We could. I kind of expect NASDAQ to take over, but the support level for this is all the way down here. All the way down here at this 55.50 area. Could break down, head back here, find support, and they'll go cruising out to the next upside targets. So NASDAQ, though, has the stronger case for going higher in the short term, but that doesn't mean it can't retrace back down to the roadmap line also. So we do have support right down here and the target right up here. Which way are we going? It's a hard call at the moment. As long as we stay above this kind of box right here, probably going up here. If we get below the box, coming down here. There you go. All right. Be careful out there. I've got to go be live at 11 o'clock, and see you later.